Well, let's get across the latest market moves following President Trump's strongest indication yet that he's prepared to take military action in Iran. Peter Maguire joining us on trading.com. Peter, welcome to you this afternoon. Good to have you back on the show. And you only have to look at what's going on in commodity prices at the moment to see how concerned the world is, I guess, about the disintegration of the world order as such, I guess, isn't it? Let's start with oil, because I just mentioned that news perhaps that the US is poised to take action in Iran. What's gone on with the oil price?
Well, good afternoon, Andrew. Absolutely. Massive armada as far as President Trump is indicating, and that's what he put out on Truth Social, moving to Iran. And naturally, that choke point being the Strait of Hormuz and the impact that'll have. Crude's up. Brent's nudging 70, Andrew, when you've got WTI at 64. So it's on the way to probably maybe a couple of extra bucks, and just depends on how this plays out. But we've got naturally geopolitical concerns, and that's being demonstrated as far as price. So it's been a good time over the last couple of days to be long crude.
And similarly with gold, of course, Pete, given that geopolitical uncertainty that's continuing to drive investors into the precious metal, not just gold, but also silver too, of course, but it probably goes beyond that now, that everyone's trying to get a piece of it, and up it goes.
It certainly does. 55.63, Andrew. US dollar index coming under big pressure. Silver at 117, 118. The chart tells the story, and where we go from here, I think it's very difficult to even forecast, because everything is just what we've seen in this calendar month, Andrew, really changes the whole footprint. And there will be a time that there might be a little bit of a pullback, but until that happens, it's certainly onward and upward, and everyone's stacking positions and physical and of course paper market. So it's been a January to remember.
Would you expect some sort of pullback or at least consolidation, because it hasn't come?
No, it hasn't. I mean, I would have thought possibly what we've seen as far as the velocity from that 3,800 now at 5,500, you're nearly up 50% from those lows only a couple of months ago. And there was a time there that was really consolidating, and we just were in that stuck position. Silver, you've only got to look at that. It was $29 this time last year. Now you nearly get 120. So that's unheard of, just from I think a percentage point move. There will be a time, but look, it might be, as we say in the markets, it might be a day, a week, a month, or a year away, Andrew, and no one's prepared to be short at the moment. Well, you'd have to be very game. So I think it's going to be volatile, and one needs to also consider, where do we see Fed policy, what happens as far as interest rates and US dollar, and of course geopolitical concerns.
Well, let's go there then. The US dollar has been under tremendous pressure. Made a bit of a comeback overnight, certainly off the back of what we heard from the Fed, although there's no guidance there. We don't know where the Fed is going and if they're going to cut again, and if so, when. What do you think is notable with the dollar at the moment?
Well, I think, if you look back over about probably 6 or 7 trading sessions, we were nudging nearly at 100. Now you're nudging, going to be a high 95. It's at 96.07. You've got President Trump saying he wants to see, weaker US dollar. Then you've got Scott Bessent coming out and says he'd like to see a stronger dollar. So that's always, that's a hard one to read. The next part of it, of course, is again interest rate policy from the Fed. How does that get, I think, digested from traders? You've got the euro nudging 120, Andrew, just on its doorstep. We're nudging. I spoke to Nadine on I think Tuesday morning. I said we might see a 70 this week. I was at 69.20, I think. You're nearly going to be a 71 shortly. It's at 70.80, the Aussie. And you've got a pound at 138 and a yen sitting under 153. So it's been absolutely dynamic. And I think you probably got maybe a 121 handle as far as euro dollar, maybe by end of month.
What about the Aussie, Pete? Now, obviously, a lot of this is linked to what we're seeing with potential moves from the RBA as soon as next week, closing that interest rate differential, certainly with the US.
Absolutely, 73% probability of a rate hike, and that's 25 basis points. CPI headline came out 3.6%, so that nudged up. So yes, Andrew, that's the story. And if there was, I think it's pretty much baked into that rate. You've got the screen up now at 70.90. if they were to raise rates, I think you're probably looking at a 71.25 to 71.50 very quickly. And let's just see how that plays. Currency traders are across all of those fundamentals, and of course, big statements coming from central banks. So it's a time to be very two hands on the wheel, and there's probably pretty good money to be made, but you've just got to be very mindful.
Also, maybe not a bad time to book that overseas holiday if this lasts. Now, Pete, let's wrap it up with a look at Bitcoin. Now, we have seen that inverse correlation with gold. Is that holding in the moment?
Well, it is, Andrew. We're running. I got it on the screen here at about just under 88,000. It doesn't seem to have done. I mean, it's pretty much range bound. You're in that 93 down to 85 sort of handle, and no real breakout. So yes, range bound. Secondly, from that, until you see something that really drives the market either up or down, I think there are other markets to trade. But at the present time, you're going to see movement for short term. But if you're looking at a longer term strategy, you've got to wait till we see some, I think, determinants that really change market. The market, not only sentiment, but opportunity for either an up or a downward tilt.